So the market's really moving sideways, continuing to trade in the red. For the longest time, it's really been a story of inflation, and in the last week, it's been a story of shilling weakness.
Yeah, thanks a lot. We have a situation here. It's inflation, and you've seen the fixed income yields really rising up. And we investors are actually asking themselves, if the yields in the fixed income instruments are rising up, why would I buy equities? Actually, we've done analysis and we found that from the month of December to April, there was a lot of outflows. Actually, the equity market recorded a net outflow position, while the bond market was the recipient. So really a situation is here whereby inflation is up, fixed income yields going up. So actually the valuations of the fixed income are really, really attractive. So we are looking at investors, we look at a major capital flight from the equity market to the fixed income market.
All right, let's talk about how the equity market has fared and is expected to fare. What would lift the market this week? We're expecting Safaricom to release their results on Wednesday. It is largely the market mover, the largest constituent stock on the NSE. If they pay good results, would that try to give some impetus to equities?
Well, not really, because if you look at the market for the last 1 week, it's been a preserve of the foreign investors. And you look at foreign investors coming on board, overstretching their positions hugely, and actually overstretching even the speculative lengths. And they've concentrated the activities on very, very few countries. So actually, local investors have retreated and they're on a hold position. And the ones who are in the market, they're booking shallow gains. So they're really not incentivized. They are not incentivized to be on the buy positions. So you might see this trend coming, going on board throughout the better part of this week.
All right, let's talk about what we're seeing on the shilling side. You've obviously referred to the likely impact of this monetary policy type situation on the bond markets. How much further are we likely to see the shilling depreciate? It's over 86 shillings to the US dollar. The central bank is trying to come into the market to buy euros to mop up shilling liquidity. It just doesn't seem to be abating.
Yeah, actually, two things here. You see, the global commodity pullbacks has really strengthened the dollar, in fact, for the better part of last week. And this has an impact locally because the dollar is strengthening again as a basket of global currencies, and one of them is the Kenyan shilling. And then again, the Kenyan shilling is coming under heavy pressure from the oil importers. We have an oil crisis in the country. The dollar is needed to go buy the oil, you know. And we might see the shilling actually stagnating at the current 86 levels for the better part of this week, and this is really not good for the economy. We are looking at a sustained, a nasty environment of inflationary environment when you have the shilling at these levels. And again, as I told you, it's really, really attracting local investors to the bond market side. You know, it's a bit of capital flight from the equity side, and not good for the equity market.
I mean, we've asked this question quite often, George, as to, you know, elections scheduled for year 2012, and the markets have often responded also to issues around political risk and just wranglings within the coalition government. That then is compounded by some of these broader macro issues like inflation and a depreciating shilling. So whilst this global situation of inflation gets worse and we're waiting for elections next year, are we likely to see the Kenyan market trading in the 3,900, 4,000 level for the rest of the year? Is this going to become the resistance?
Actually, I can put 4,000 mark as a resistance. It's true, we're having elections next year, and traders are being cautious. Investors will take a cautious approach. In fact, in my opinion, I think investors need to revalue their positions at the end of Q3 this year with a view to taking making a decision to their position in 2012. And politics, yes, it's a real threat. Looking at the bank's results, I think if you look at the loan book growth, it's a bit cautious. It's quite a lot of risk aversion in lending because they banned their fingers in 2008. And now we're having a potentially very, very tough election in 2012. So it's a bit of cautious approach in the market. And we might see a bit of resistance, it's 4,000 mark going forward. It's not a one-way bet like we had in 2012, 2010. I mean, it's a bit of multiple picks this year, and the investors should brace themselves for that. It's kind of a jigsaw environment. It's up and down, and it's quite volatile.
Okay, for those investors who are still optimistic that they could possibly see returns that they saw in 2010, what would you advise by way of asset allocations? We know that for many foreign investors, the focus has been on the blue chips like Equity Bank, like KCB, Safaricom, just stocks that have consistently performed well and that are highly liquid in this market. Where else should people be putting their money?
I think, in my opinion, on the equity side, I think we need to, investors need to reduce the exposure on the equity side. And you need to look at other high-yielding exotic assets. We are looking at the fixed income instruments. The shilling and the dollar is another very, very, very classic asset class. And guys, look at Q1 Bank's results. If you look at the Forex line item, the Forex income line item, it was huge. Banks really directing a lot of money from the pullbacks they had in Q1. The shilling hit 86. A high of 86.11. That's an all-time high. So I think for investors, high-risk investors, if they are planning to stay in equities, I think play short. It's quite volatile. If you sit on a 5% positive position, pull it out. And I think one of the best-selling trading strategy for this should be investors should buy on the dip. Just pick it up on dips, because the share price. Most of the share prices tend to slightly get excited on positive market sentiment. We have Safaricom results ahead on Wednesday, and this has really excited the share price. Huge demand position today, and mostly all of it is 100% foreign investors.